Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Wednesday, December 2nd. Okay, I thought yesterday was a game changer in a lot of respects, and I'm going to point out what I saw significant coming out of yesterday. I think there are moments in markets where I think it's important to look for a changing, a change of character, something different. And I think we got that yesterday in a couple areas. So let's take a look. The first big one is this impulsive breakout on the euro US dollar pair. If you remember, we have been watching it toggle against this downtrend line, and we were looking for a breakout in the August-September timeframe. Did not get it. Came down, dropped below this 117.5 area, and then recently put in a surge, and just now taking out 120 with conviction. And you can see that this is breaking a downtrend line that goes all the way back to 2018, where it was at 125. Now, on the blog site, I go through the winners and losers on this move, and just to quickly summarize the winners. The winners are going to be your precious metals and miners. Broadly speaking, the commodity complex, copper, oil, all the soft commodities as well, base metals, all that stuff, aluminum, all that stuff is going to be beneficiaries of a rising Euro USD pair. And really, primarily for these commodities, it's the falling dollar that's going to be the big catalyst. And if you go look at strictly the US dollar chart, DXY or UUP, it dropped. We just took out 2-year lows below 92 on the dollar chart. And that's significant. Now that's going to be massive overhead resistance. So the trend is firmly in place for the dollar to continue its slide. I'm sure there'll be, a kickback rally at some point. Everybody and their brother are short the dollar. And I thought there was going to be a big squeeze higher to get those people out before they pull the rug, but that's been wrong, and it's continued to slide. So take a look on the blog site. There's further detail on it. In fact, I posted Kathy Lean from BK Asset Management. You may know her and her husband Boris over there. I think a lot of them, and they seem to put the currency information, which I don't trade a lot of, and I'm, probably above my pay grade, but she listed out 5 reasons why this currency pair broke out. So I think it's worth a read if you're, interested in the commodity precious metal complex. It also has implications for Europe and for U.S. multinationals that do a lot of business outside the States. That's going to be a tailwind for them because our stuff is now cheaper for the exporters. So take a look at that. I think you'll find it interesting. But whenever you got a breakout of something that's, taking out a 2 or 3 year downtrend line, I think it's significant. One of the beneficiaries of that falling dollar are the commodity-focused economies and countries. One of them is Brazil. This is a chart the Brazil weekly ETF. I posted this as a long trade idea 3 weeks ago on November 16th. This is a follow-up to that post. I think the real move in Brazil is going to be on this breakout above 35. Now, of course, it would have been great to buy this breakout here of this downtrend line and at this recapture of 29, but that's all rear view mirror stuff. The key now is look ahead. If price takes out 35, I like this long. And I think your first target is going to be up here at a volume over price resistance level just below 40. And then ultimately has the potential to get up here to T2 closer to 45, where you can see it spent a lot of time over the last couple years up in this upper level of value between 40 and 45. So don't, it looks a long way off now, but I think this can grind higher with a falling dollar. And what I said in the notes is don't front run it. We could see a couple weeks of consolidation right here below resistance before we get the breakout. So instead of front running it, I prefer waiting for the breakout, getting long, and buying at least 3 months at a time. I'd like to see you go out to March or even June of 21, get long with $35 calls, and just sit back, tuck this thing away, and let it grind higher. Set your stop just below 35 on a weekly closing basis, and then let's see what happens. So I really like that. Another name in the news is Salesforce CRM that recently announced they're buying Slack Work. WORK is the ticker on Work. I'm sure you're familiar with it. You probably use it all the time. CRM had been working in this wide consolidation range from about 275 down to 230. You can see that we have an open gap between 230 and 215. Now I just looked pre-market and price is trading like 227. I think this sets up great for active traders to use 230 as your pivot. As long as price holds 230, or if it drops down below and then recaptures it, I think you can be long against 230. If it stays below 230, I think it favors a gap fill down to at least 215. You've got the 200 coming in at around 213, and then you've got one last level of support here at around 207.50, 205. Now, if price opens, just below 230, and the market is weak, and it seems to be weak. It was 740 as I started the video, and it seemed like the market was losing a little bit of steam. If you can anchor an objective short with price relatively close to 230, and then put your stop just above, it might set up as a nice little trade to come down and fill the gap and make a run down here to 213 or so to tag the 200. If you're more of a bull or a swing trader that wants to take, a multi-week view or even longer on CRM, if you get that gap fill and you come in here to the 200, let's say between 207.50 and 212, to my eye, that would be a very objective place to take a long on CRM with all this support below, and then set your stop around 205. So you're looking at $4 or $5 a risk for what could be an intermediate bottom here, and then move back up towards the highs, into the spring. Very objective location here. Very little downside if you set your stop. I mean, that's the name of the game, right? Sell resistance and buy support. If you got this move all the way down to support at the 200 and against this breakout line, I think that would set up as a nice swing long entry. And keep in mind, it may take, a week or two for this thing to stabilize after earnings and, all that stuff. So I don't think that's going to be like some specific moment. I think you're going to get a little basing action here around 210 after this move down. And if you see that, that would be a good visual cue to take your long. Okay, let's get into the indexes and FANG. SPY 2 hour, we had our gap up that held, had some late day weakness, but nothing too major to speak of. Now we are off a little bit this morning in futures, so we're going to need to watch that carefully. Here's the key on the 30-minute chart. We've got a $3 gap that goes from 365 to 362. 365 is your pivot. No doubt about it. Above, you can stay long, but below, I think you have a tactical short setup with a stop just above 365 and look for this move down to 362. And if nothing else, if you're like me that has a fair number of longs out there, you can view this as a tactical hedge. I don't think you want to sit idly by, if you've got a bunch of longs and you're active and you're in front of your screen. Just watch this $3 gap fill. Get short, size it like a hedge, based on what you got going on. And if you get that move, I would be covering on the gap fill. And that would be a good way to make some short-term money to balance out what would surely be losses on your existing long positions. So you can size that simply as a hedge, so you can get out of that move relatively unscathed, or you can size it to try and make money on this if you're a sharp intraday trader and can watch it. Once you get this move, I think you'll get that gap fill. So that would be, a good tactical trade if the market's going to have a give back day today, which is entirely possible. Qs. Big gap up. Had a reach back candle that almost got to 300. So there's not really as big of a gap here as there is on SPY. Traded up most of the day and had a soggy final couple hours in trading yesterday afternoon. Nothing to worry about, but if we trade back this morning back to this 300 level, I think that's the level, that's the first level that has to hold 300. If not, probably going to get a pullback into this 297.50 area, where I think you can be a buyer. So if you were, had gotten short up here, yesterday into the close, and you got that follow through down this morning, I would be looking to cover either here at 300 or at 297.50. Let's look at the Q 30-minute chart. Here you've got that channel that I drew in. With the soggy opening, I think there's a real good chance we come back here to 300. So, if you're tactical and nimble, depending on where we open, you can take a tactical short for this pullback. And then if that cannot hold, here's your 297.50 area where I would be a motivated buyer, and a location where I'd certainly be scaling out of my shorts and wanting to go the other way. Notice the posture of the PPO setting up here for a bear cross, and notice RSI. Although I don't have the trend line in here, you can tell that we've dropped out of the dropped below 70. So we may see a little downside follow through to bring RSI back into 50, and hopefully see an upturn, and then have PPO make that cross and then curl back up. So I'd be prepared for some weakness this morning. I don't think, time will tell, it could be catastrophic, but I'm not planning on that. We'll just have to see how it unfolds. Yesterday, IWM was soft. It was still up 1%, but it never could take out this 184.25 that I thought was the key. So it's been toggling between 181 and 184 and a quarter. I tried I tried one long yesterday and got stopped out pretty fast. So I just let that go. But I would be a buyer of IWM if you got to move back into 181. That would be a very objective level to take a long, or on a breakout above 184 and a quarter. And here you can see the levels in detail. We talked about, if this pulls back into 181, I'd be a buyer there. And also if price were to break out. But, for you nimble traders, 181 to 184, that's a $3 range, and that's certainly wide enough to make some money, playing the ping pong game while this decides which way it's going to resolve. Yesterday felt like a game changer day on FANG. Saw a lot of igniting candles after a long period of dormancy. For many of these names, they just haven't done much in the last, since that September 2nd massacre. I think that was the date of the big correction. FANG has been largely range bound, and probably pretty frustrating for swing traders or traders that have been conditioned for these names just to always go up and never go down. There's been a lot of chop, a lot of frustration, but yesterday I felt like something was different. We had talked about this 280 level. We talked about it yesterday morning. We've talked about this level for weeks. We got the big impulsive breakout yesterday with a huge igniting candle. We had 284 already pre-identified. We hesitated for an hour, and then another impulsive stick higher. That's bullish price action, and that's something different. Not only moving out of this consolidation range that's $12 wide, but also in the price action here, we didn't just kind of limp through, you know, taking our time, blah blah blah. These are igniting candles, and I think that's significant. I did take with price at around 284, I did take a long position yesterday in the December 290s. See if price can make another move higher here and make a push towards the prior high at 297, and then potentially 300 if there's a big Santa Claus rally. If price pulls back into 284 and loses that level, I'm going to exit my position. I'll get, you know, stopped out at basically for a scratch trade below here. But if you saw that move and you saw 284 hold, I would be a buyer there for a breakout and then a back test of this level. Now, can it come back and back test the whole breakout? Sure. And if you weren't in and you got that move back to 280, I think you got to be a buyer there. Why? Because this was the trading range. Breakout, full back test, and then reacceleration higher. So if you're not in, look for entry points at either 284 or 280. Apple. We talked about yesterday, massive amount of call buying, 48 million on, what was it, Monday. Big power candle, taking out downtrend resistance, then coming up to take out this 120 level, which we thought was key, and then another igniting candle and breakout yesterday above 121. Same idea as Facebook. Had a different feel yesterday. Apple was strong and resilient even into the sell-off, into the close. If you got a pullback into 121, I think you got to be a buyer there. If that doesn't hold and it pulls into 120, I'd still be a buyer there with tight stops below, you know, each try. Unless the whole thing falls apart and the whole thing was a head fake, which is, you know, always a possibility. But I think the bulls are in control here on this time frame, and I would be looking for entry points if I missed this move here, and it depends on time frame and all that, of course. But I think Apple is set up to go higher. Tesla, I've redrawn this a little bit from yesterday. Looks to me like a symmetrical pennant triangle formation centered on 580. If you get a breakout here, you know, 585, 590, really anything above 580, I think you can be long. But I think until this pennant either breaks out or breaks down, the move is going to be muted. So if you can, you know, hold your horses, be patient, and wait for either a breakout or a breakdown out of this triangle, I think you'll see more of a, you know, sustained move. And the price action has been nothing but bullish. So I view this as a continuation pattern for higher prices. And if you get that breakout, I would be a buyer there looking for 605 and possibly even another leg higher. I'm not sure when that S&P inclusion date is. December 21st seems to ring a bell, but you'll have to check that. And I think there's going to be bullish tailwinds here until price proves otherwise. Microsoft felt different yesterday. At midday, it had done nothing. And then all of a sudden, caught fire, came up here and tagged this well-defined level, 217.50, right in that area, and then backed off. I would be a buyer on a takeout of, 217.50, 217.75, 218 for sure. I'd be a buyer looking for 221 and then potentially 225. Notice that the PPO has moved into bullish territory, as has the RSI. What you can do here, and I should have done it, I apologize, is you can drop some Fibonacci retracements on this. And if you got a little pullback, into 215, 214, get a little 50% halfback move, I think you could take a long there and try and get a push back up to 217.50. I think that would be, a good trading op. So on FANG, I want to lean bullish now. I think the igniting candles, and if you look at most of the PPOs and RSIs and these names, they've all gone bullish. So my default now is bullish on FANG names. Amazon. I have not been an active trader of this, so keep that in mind. I know that Amazon can be frustrating, as can any stock. And there's a few people in the trading room that have been kind of frustrated with it for various reasons. I think one of the main reasons is the options are so damn expensive. It tends to shake you when price doesn't move, in your favor right at that very moment. You can look at some substantial red figures quite quickly, even though the technical picture has not changed one bit. So if that's you, maybe it's too expensive for you to trade. If you can't comfortably take, a one contract position that surely is going to be over $1,000, don't trade it. Because if you're going to trade poorly because you're terrified of every little 5-minute bar, it's not a good stock for you. But let's look at this. I mean, what a technical study. I keep talking about these. I'm not going to call them stupid levels. You know what I mean. These levels that we've talked about and talked about and talked about, they continue to work. Move here to 31.50 that held. That's your objective long. Yesterday, we had a couple of reach back candles into 31.60 after 31.50 bounce. We had several hours of reach back. That was, potentially a second bite at the apple. But even if you missed it, come up here to 3,200. When 3,200 was taken out, that was your long opportunity. Even if you had tried to short it, you would have been immediately stopped out, and you got, if you quickly realized that, hey, something is different. We're breaking out above 3,200. If you got long, you got your move to 3,250. 2 tags, 2 chances to get out at 3,250. And if you're trading sharp, if you trust your levels, that's your objective short. And you got $50 coming back at the end of the day, right back into 3,200. So you could have been wrong, or you could have been watching. And if you played 3,200 to 3,250, you had $100 of travel in just a few hours. And I mean, that's trade. That's active trading. Okay. Now let's talk about today. This gap from 3,250 to basically 3,320, that's a $70 gap, is now in the crosshairs for longs. Okay. If price opens weak, drops below this 3,200 level, then reclaims it, what do? We get long. Reclaiming a level from below is bullish. Get long 3,200. Look for your move up to 3,250. You can cover there and book that profit, and then wait to see how price handles this gap. Now yesterday, gap resistance held. It held back here as well. There's been some reaction points at 3,250 in the past. But once price breaks above 3,250, you got to get long and look for a $75 move to fill this gap. That will be a nice trade and one that you'll be proud of if you play it correctly and you get some cooperation with price. I think if the bulls are in control, and I think they are, I think they've grabbed the reins, I think you get long here at 3,250 with a stop just below, and you look for that $70 to $100 move. And if things get rolling, I would not be surprised if you find yourself here at 33.35 in short order for what amounts to a $100 move. And I think that would be awesome. Google, something different. What's different? $75 trading range for about 6 weeks. We broke out, and I flagged you guys on this breakout yesterday, and back tests that held. I got long yesterday at the close. I got long 1,800 calls. Today, my stop is just below. If we're weak coming out of the gate, I'll be stopped out. But if price drops down below and then reclaims 1795, 1800, I am getting long again. I think this is going to 1870 on a $75 measured move, unless this whole thing was just fake and we just go back down to the bottom of the box. That's all going to be dependent on price action and general market conditions. But like I said, my default is looking to get long here. And obviously I'm hoping this holds and we reaccelerate. But if not, paper cut, reload, get ready for the next trade. Netflix, something different. Igniting candle. Weeks and weeks and weeks and weeks and weeks. 494. Boom. Impulsive candle. I hope you had that alarmed. If you didn't, you must not have been, interested in trading that. If you did, I hope you got long. That was a nice opening trade. I got in, as quick as, humanly possible, which was not at 495. It was, up here at 497. I got 500 calls for Friday. Now we got to push up here to 510, and we came back and held 505. Okay? I hope this area holds, but I'm willing to let this come back to back test 500. And, you know, if I get stopped out for a scratch trade, you know, that'll suck, but that's trading. I think this is going higher. I think it's going to fill this gap to 515, and I would not be surprised if we come up and fill this other gap to 525 if the general market, you know, cooperates. I do not ignore these igniting candles. I think it's significant, especially coming out of this huge range. I think the bulls just took charge of this tape on Netflix, and I want to see if they have follow through. So that's where we stand this morning. Longer video, but hopefully you can appreciate the extra content. Looking at the Euro US dollar pair, looking at emerging markets, that US dollar weakness is going to have big implications across the board, you know, for precious metals, commodities, emerging market countries that are resource specific. And I think something different happened in FANG yesterday. A lot of these igniting candles out of big bases, I think they go higher. Whether it's higher today or higher into Christmas, I can't tell you. But I think the bulls grabbed the FANG tape yesterday. And between Apple, Facebook, I mean all of them, Apple, Facebook, Microsoft, Netflix, Tesla's still strong. I think the bulls are in control. And the bears are going to have to prove it now. And maybe that'll be today. If they, you know, crater the thing, then I was wrong and I'll get stopped out of all these positions. But until that happens, I am leaning bullish. So if you're new here and you like the content, please hit the subscribe button and the alarm bell to get all my content. Also, look over in the show notes for links where you can subscribe to my content. You'll get emails each and every time I publish, along with a link to the blog site where you'll find a lot of interesting articles. This has been Chris Buss with Traders Profit Compass. Talk to you soon.